Nike earnings just dropped, and the big question on every investor's mind is the comeback real? After years of struggle, we're finally seeing it. CEO Elliott Hill is in the middle innings of a massive pivot. We're talking trough and recovery, refocusing on what made Nike great. The brand that once dominated every street corner is trying to find its soul again. Today, we're unpacking the numbers to see if it's working. From wholesale surges in North America to persistent headwinds in China, there is a lot to unpack. This is the most important report of 2026. We're going to look at the EPS beat, the revenue stabilization, and why the win now strategy might actually be the turning point for Nike. Whether you're a long-term holder or looking for an entry point, you can't afford to miss this deep dive. Let's get into the details right now. But first, if you're tracking this turnaround, hit that like button and subscribe. We're covering every major retail story throughout 2026. As always, this is for educational purposes only. Investing in turnaround stories carries significant risk. Do your own research. Nike reported Q3 earnings per share of 29 cents. While that's a sharp decline year over year, it actually beat expectations. Revenue came in at $11.2 billion. While essentially flat in this trough period, stabilization is exactly what the market wanted. Specifically, the North American market showed signs of life, growing 8% as consumers started responding to the new marketing efforts. The biggest shift under Elliott Hill, wholesale is back. Nike has aggressively repaired ties with partners like Foot Locker and JD Sports. Wholesale revenues surged 24% in North America, a massive pivot from the previous regime's rigid direct-to-consumer focus. Inventory health is a rare bright spot, down nearly 3%. This means fewer margin-crushing liquidations in the future for Nike. A cleaner inventory position creates a much better setup for the high-margin new products that are hitting shelves this summer for the World Cup. Hill's win now strategy is dismantling the old direct-to-consumer acceleration. He's focusing on culture and rebalancing the marketplace. By re-engaging with local communities and core athletes, Nike is trying to reclaim the cultural momentum that defined its peak years. The Nike Sport Offense restructuring has merged designers into a single unit to accelerate the sketch-to-shelf timeline significantly. They're trying to move faster and be more accountable, ensuring that innovation leads the brand rather than chasing the latest trends. Innovation is the heart of this recovery. Take Nike Mind. This sensory-focused footwear franchise is a bold new direction for the brand. Featuring 22 foam nodes designed to stimulate sensory receptors, Nike is aiming to recapture the critical everyday runner market. Then there's Project Amplify, a powered footwear system currently in testing that uses motors to augment the user's leg movement. This robotics-driven innovation aims to help everyday athletes walk and run faster with less effort, proving Nike is still a tech powerhouse. The real catalyst for 2026 is the FIFA World Cup. Nike is planning its largest marketing blitz in history to dominate the global stage. As the primary sponsor for teams like the US and Brazil, Nike is spending $5 billion to shift back to iconic brand storytelling. This isn't just about selling jerseys. It's about reclaiming the cultural zeitgeist and proving Nike is the undisputed leader in sport. But it's not all smooth sailing. Greater China sales fell a staggering 17% as local brands continue to gain market share. The path to recovery in China remains very uncertain, and Nike will need a specialized strategy to win back the world's largest consumer market. Then there's the tariff risk. Higher product costs are expected to squeeze gross margins by nearly 200 basis points this year. Turnarounds are expensive and the macro environment is unforgiving. These external pressures could delay the full financial recovery for Nike. Despite the risks, analysts maintain a moderate buy rating. With the stock trading at 2017 levels, many think the failure is already priced in. Price targets range from $54 to over $100, showing massive upside potential if Hill can successfully execute his pipeline. So, is the Nike comeback real? The operational data suggests the ship is finally turning. Repairing wholesale ties was the right first move, but the financials are still catching up. We are in a trough and recovery phase, and investors will need patience during this transition. The World Cup this summer is the ultimate test. If Nike can't recapture its magic then, the turnaround might take longer than expected. Nike is a story of resilience. It's a classic brand trying to prove it still has the winning edge in an increasingly competitive world market. With Elliott Hill at the helm and a massive innovation pipeline, the foundation for the next decade of growth is being laid right now. What do you think? Is Nike a buy at $50? Are you betting on the turnaround? Let me know your thoughts in the comments. If you enjoyed this 6-minute deep dive, hit that like button and subscribe for more honest financial reviews. We have a lot more coming. I'll see you in the next video as we continue to track the biggest turnaround stories in the retail world. Stay tuned and see you soon.